Hello and welcome. Let's be honest. Have you ever looked at an insurance policy and just felt overwhelmed? Like you need a special decoder ring just to figure it out? Well, you're definitely not alone. Today, we're going to tear down that wall of text and turn all that confusing fine print into what it's supposed to be, a simple, solid promise.
So I want to start with this question right here. When you look at your policy, do you see a confusing document that just gives you a headache? Or do you see a powerful promise? My goal today is to help you see it as a powerful tool for your financial safety net. All right, let's get into it.
Okay, first things first. What even is an insurance contract? It sounds so formal and, a little intimidating. But I promise you, the basic idea behind it is actually much simpler than you think.
So, by the book, it's a legal agreement. Here in India, the whole thing is governed by the Indian Contract Act of 1872, so it's got some serious legal weight. But all it really means is that a company, the insurer, agrees to protect you financially from certain risks, say a health emergency. And in exchange for that protection, you make a payment, which we all know as the premium.
But let's just strip away all the legal jargon for a second. At its very core, an insurance contract is just a promise. It's a deal. You hold up your end by paying, and the company promises to hold up their end and protect you if something bad happens. It's really that simple. Think of it like a formalized handshake. Now, for that promise to actually be legit and hold up in court, it needs a few essential ingredients. I like to think of them as the pillars or the building blocks of a really sturdy house. There are 6 of them, and for a policy to be valid, it's got to have every single one.
First up, we have offer and acceptance. Sounds technical, but it's not. You know when you fill out that big application form? That's you making an offer to the insurance company. And when they look it over, say, yep, this looks good, and issue you the policy, that's the acceptance. Boom. That's the first pillar.
Number 2 is consideration. This is just a fancy legal word for what each side brings to the table. It's a two-way street. Think about buying a cup of chai. You give money, that's your consideration. You get chai, that's the shop's consideration. With insurance, your consideration is the premium you pay. The insurance consideration is their big promise to cover your losses. Fair's fair. All right, our third pillar has a very fancy Latin name, consensus ad idem. Don't worry about the Latin. All it means is a meeting of the minds. This is so important. It means both you and the insurer have to be on the exact same page. For instance, if you think you're getting insurance for your new car, but the policy is actually for your old scooter, there's no meeting of the minds. Everybody has to agree on the same thing in the same way.
Next is free consent, and this one's pretty self-explanatory. You have to agree to the policy willingly. You can't be forced, tricked, or lied to. The agreement has to be totally genuine from both sides. No funny business.
Our 5th building block is the capacity of the parties. The bottom line here is that everyone involved has to be legally allowed to make a contract. For you, that usually means being an adult who is of sound mind. This is exactly why a child, a minor, can't just go out and buy an insurance policy for themselves. And last but not least, number 6, legality. The whole point of the insurance has to be legal. It's pretty simple, right? You can insure your home against a fire. Totally legal. You can't insure your getaway car for a bank robbery. The whole purpose of the contract has to be above board for it to be valid. Okay, so we've got our 6 pillars. Now let's talk about the rules of the house. A couple of key principles that really drive how this whole thing works in practice. The number 1 absolute golden rule in India is this: you have to pay first. Simple as that. Your coverage doesn't start with an IOU or a promise to pay next week. That premium has to be paid up front before anything else happens. And I want to be clear, this isn't just some company's internal policy. It's the law. It's written right there in Section 64VB of the Insurance Act of 1938. It says, crystal clear, that an insurer cannot take on your risk until that premium is in their hands. That's how crucial this pay first rule is. Now here's something interesting. You buy a chocolate bar, right? But you solicit an insurance policy. Ever wonder why we use that different word? Well, a chocolate bar is simple. You grab it, you pay, you leave. But an insurance policy? That's a complex product, tailored just for you. The word solicit implies you're not just buying a thing, you're actively seeking professional advice to find the perfect fit for your specific needs. It's a completely different kind of transaction. Okay, let's switch gears and talk about my favorite part, the safety nets. Because this system isn't just about rules and regulations. There are some really important consumer-friendly features built right in to protect you and put you in the driver's seat. First up is the grace period.
Look, life happens. We all get busy, and sometimes a payment deadline just slips our mind. The grace period is your safety cushion, designed for exactly those moments.
So how does this actually work for you? Let's say your premium is due on the 1st of the month. The grace period gives you an extra window, usually about 15 to 30 days, to make that payment without any penalty. If you pay within that window, it's like nothing ever happened. Your coverage just continues. But, and this is a big but, if you miss that grace period window, your policy could lapse. And that means you could lose your coverage, which is a situation you really, really want to avoid.
All right, the second big protection is called the free look period. The best way to think about this is like a test drive for your new policy. It's a cooling off period, basically.
So how long do you get for this test drive? Just remember this number, 15. Yep, that's it. You get 15 days. From the moment you receive your policy documents, the clock starts ticking. You have 15 days to sit down, read through everything, and make sure it's exactly what you thought you were getting. If you're not happy for any reason, you can return it.
And using it is super simple. Step 1, as soon as you get the policy, review it. Really read it. Step 2, if you're not satisfied, you have to let the insurer know in writing within those 15 days. And step 3, you'll get your money back. Now, they'll deduct a tiny amount for the few days of risk they covered and maybe for a medical exam or stamp duty, but you get the bulk of your premium back. It's a powerful tool that makes sure you're 100% comfortable with your decision.
And really, that's what this all comes down to. It's about taking something that looks incredibly complex and seeing it for what it is, a clear, simple promise. Once you understand the parts, the rules, and your rights, that knowledge becomes your single greatest asset.
So I'll leave you with this question to think about. Now that you have the blueprint, you know the pillars, the rules, the protections. What's the very first thing you're going to look for the next time you look at an insurance policy? Because that knowledge, that's your power now.